Hey everyone, this is Haider, the founder of TradeOutLoud, and this is our talk about TradeOutloud for the Sun Energy Traders event. I'm really excited to be here, and I really appreciate the organizers of this event giving us a chance. So we are going to talk about TradeOutloud for about more than half an hour, and uh, I'll go through a bunch of stuff today, and I really hope you are going to get something out of this presentation. So uh, let's start with what TradeOutloud is. So TradeOutloud is an AI-driven, mostly data-driven platform that was designed to help retail traders find some edge in the market. So I think with how much data that's available these days, insider trades, options flow, hedge fund trades, we figured that it was time someone built a really solid and comprehensive platform that showed all kinds of data to retail traders and then let them do their due diligence to find and make their own place. So we focus a lot on being a one-stop shop. We are not just an options flow platform. We are not just sort of a stocks or a stocks analysis platform. You'll see that the focus is really on being a one-stop shop for all retail traders. So let's actually just dive right in, and I hope you'll love some of the stuff that I'm going to show you today. So we have a lot of stuff. So this is sort of the market dashboard, and you can see we are covering a lot of stuff: options flow, intraday, signals, scanners, investing portfolios, research, complex tools, and then watch lists and stuff like that. But obviously I can't go through all of that in 40 to 50 minutes. So what I'm going to do is go through some of the best tools that I personally use every day to trade. And I hope sort of that should give you a good idea of what the platform is, how does it work, and what can it provide to retail traders. And the focus, and the reason I'm going with just a couple of tools is I don't want everyone to sort of come out of this presentation wanting to buy our subscription. That's sort of and that's not the idea here. I really want everyone to come out of this presentation having learned a couple of things about how can we leverage data that's out there to improve our own trading. So hopefully that's the point that will come across after this presentation. So let's start. So this is the overall market dashboard, which shows sort of the summary of how the stock market is doing. And there are a lot of things here, but I'm going to go to sector rotations. So sector rotations, this widget, this shows a summary of how ETFs for different sectors have been doing for some time, and that time could be 1 week, 2 week, months, years, stuff like that. And oftentimes you'll see that when some sectors are going down, some sectors are going up, and there is always this rotation going on in sectors. So for instance, in 2020 and in 2021 there was a huge rotation in the tech sector, and almost all of the tech stocks rallied hundreds of percent, and there was also a huge rotation in the growth names. But lately that rotation has now gone into energy, maybe because of war and other fundamental factors, but there has been a clear rotation into the energy sector, and you would be able to detect those kinds of things from here. So here's how. So there's a blog post on how you can find sector rotation and how you can actually play them. You can see that here, and that this is a blog. But let's see how we could have caught that energy rotation, and let's see what rotations are going on these days. So you can see that this yellow line is the energy sector, and this is for the last 30 to 40 days. And let's see if we can increase. So let's see 60. Yes. So let's look at the last 60 days, which would be about 3 months of data, because there are only like 22 trading days. And you can see that from January onwards, right as we started the year, stocks and most sectors, we have S&P here as well. You can see S&P was starting to, let's actually, all right, this should give us much better. Okay, so you can see S&P was either staying flat or started to go down, but there was this sector called the energy sector that started to go up in a pretty clear, nice uptrend. So there was some consolidation here, but it has been going up ever since. And in the last 60 days, it has gone up about 25%. And just by looking at this graph at that point in time, you would have seen a very clear distinction between what the energy sector is doing versus what other sectors were doing. So just let's say at this point in time on February 7th, it would be very clear what sector is leading, and you can start looking for plays in that sector. And we actually made the blog post, I think, around February end, and ever since, I think energy sector has gone up 10%, sort of more than 5 to 10% again. And at this point in time, let's say you bought some shares in the ETF because you thought energy was leading and you wanted to play the sector rotation. From this point in time onwards, in just about 2 months, you would have gained an additional 22, so about 14% gains, while the market is staying constant or sort of flat all this time. It's very choppy. There are not many good plays out there, but just this one single widget would have helped you massively in sort of getting good plays, letting you know which sector is leading right now, and etc. So I hope this helps. I hope I've sort of sent the point across on why this is useful. Energy sector is still sort of long term, and energy sector is still leading. You can also look at shorter term charts to see what sectors are starting to lead, but always look at this 30, 60 day sort of chart. You can see energy sector is still at the top even on a 30-day basis. So always keep this in mind. This is the really good widget to gauge where the money is flowing in the market. The next widget that I'm going to talk about is, there are two in the options market dashboard, which is just a summary of how the options market is doing right now, is this daily and weekly options flow. So this is a very high level summary of what stocks are getting the most bullish or bearish flow, just to give you an idea, or just to give you an idea about stocks that you want to sort of look into. And then similarly, we have this dashboard that shows the calls and puts market summary based on the number of orders that stock had received from a flow perspective, the premiums, the average expiration date, how many of those were out of the money, stuff like that. These are really useful in generating trade ideas. Let's now dive into the stock summary dashboard, which actually now lets you look inside each stock or do analysis for each individual stock, so that you can make plays, let's say, and do a bunch of other stuff. So right on the top, you can see a bunch of algorithmic tools. So a lot of the platform is data driven and algorithm driven, and you can see we have these SR levels. So this is a support and resistance levels. These are automatically drawn by an algorithm. If you click on it, you'll see these levels being drawn. This was a nice resistance level, decent support, not that well. This level has been working as a really good support level. You can see we have gone up, and then this one was a really nice one as well. So we had a triple bottom here, and then we went up. So just sort of a very preliminary analysis on what levels there are, and many people actually just play support and resistance levels, and they're very successful. So this algorithm actually just gives you an initial idea of where the important levels are. You can draw trend lines, you can use entry exits, you can draw event driven anchored VWAPs, and this is something that I really love sort of using, because this draws anchored VWAP. So VWAP is obviously, I think everyone uses VWAP for day trading, but you can actually anchor VWAP from any point in time to do swing trading as well. And we have a very lengthy article on how to use anchored VWAP that goes into detail on what anchored VWAP is, how to use it, and where to anchor VWAP from to find really good support and resistance levels. So one example I'll just show you right away. So anchored VWAP, the event anchored VWAPs work for the daily chart, but if there was a dip on around October 2020, and that was a sort of big low. We went from a high of 358 to a low of 322, and if you anchored the VWAP from there while we had this dip in the last month, then you would have found a really nice support based on that anchored VWAP. Then we can also anchor the VWAP from March low. So let's say we come down further, then this would be a level that I'd always be looking at. And if we ever come down and we touch this level, then I'd expect this level to act as a support so that I can start making bullish plays. This is like the absolutely best indicator, technical indicator that I have ever used. And obviously it's free. You can use it. You can draw event anchored VWAPs, and event sort of just refers to drawing these anchored VWAPs from different anchors. Give me a minute and I'll show you. So if you click on this, now we have drawn these anchored VWAPs from lows, from highs, from the start of the month, from different gaps, from recent lows, stuff like that. So we give you a couple of anchored VWAPs that are really meaningful and that you can use to trade. So that's that was sort of a very basic stock summary dashboard that we have. Another really useful widget is this price pairs, and this is something that I use along with sector rotations to find out when sectors or when any sort of stock pair is breaking out. So you always want to compare, let's say, sectors with S&P, and let me show you a really nice thing. So you can see the XLE slash S&P pair was sort of going down, going up, going down, going up, and it was in this consolidation, or it was in this range for like throughout 2021. And SPY was mostly sort of like, if SPY went up, let's say this went up as well, so the ratio was always staying constant. But in 2022, like right from the start of the January, you can see, if you consider this line a resistance, you can see we actually broke out of this huge region, and then we have not stopped going up ever since. And around this point in time was when we wrote the article on how to use sector rotations, and you can see it has gone up. It has gone up ever since. And so just sort of using this chart to draw basic sort of resistance support regions to find out where a sector is staying for long periods of time before it breaks out, that's really useful in actually confirming that a sector is indeed breaking out. And the energy example is really good because we have had a very nice rotation, a lot of money flow into the energy sector. This would be it. Like, I hope this is useful to you, and I hope you sort of spend some time working with anchored VWAPs, working with support and resistance levels. This makes it really easy for you to just do 2 clicks and get a very good idea on how the price action, sort of how the stock is looking from a price action perspective. Many people want to just look at price action because they think price is the only thing that pays. This actually lets you do that in just a click or 2. This is, again, before going on, nice example. So from the low, you can see we found support here, we found support here. Then now this could be an anchor as well. So we found support here, we found support here. This could be an anchor as well. We found support here, we found support here. So this was a literally perfect example of how you can anchor VWAP from different points, and sort of lows, recent lows is one point where we generally anchor from. You can see how if we had just done that and bought every dip, then we would have been in this uptrend throughout, sort of from the very bottom, let's say, or maybe not the bottom, but from here or from here, because this is where sort of the first, this or this here was the sort of first dip where we could have actually used anchored VWAP to make a play. Again, this is fantastic stuff. Please spend some time learning about it. It's not just specific to TradeOutLoud. Anchored VWAP is a very general concept, but in my experience, this is the best technical indicator that's out there, and we make it really easy to use it. Now let's start diving into options flow. And options flow is obviously something that has gained a lot of traction over the last 2 or 3 years, and at this point in time there is more money being I believe spent in the options side of things rather than buying or selling shares. And obviously from a retail perspective, not from a market maker perspective. So when there are billions of dollars being spent on options flow, and we have the ability, like not just we, since this data, if you can pay a large amount of money for it, you can get this data, and obviously we don't charge a large amount of money. If you can spend some money, and if you can look at this options flow data and there are millions of participants and they are putting large amounts of money, and you can see what they are doing. Why would you not want to, like, why would you not want to look at, let's say, what a hedge fund or what a sort of smart stock player or sort of big what the big money is doing? You'd always obviously want that, and options flow is sort of in itself can provide you really significant sort of plays. It can provide you an edge in the market, and if you can use it well and not just sort of go into every play that you see, I believe it can provide you a really significant edge in the market as a retail trader. So let me actually first go through the live options flow tool, then I'll come back to why we had to create a dashboard. So this is how options flow look. We have an order for each sort of a big flow that comes in. So any flow above $25,000 in premiums, we have an order for that, and it's live. As soon as there is an order, we show it to you here. So this for SST, a call was probably sold because it was filled at the bid for strike 12.5, while the let's say stock price was 20. The size was about 400k. Now this is a large amount of money, and this order was actually opened for the very first time. So you want to see what's going on here. But the problem with analyzing options flow, as most platforms and most people do, is there is just so much stuff going on. There were 16,000 entries on Friday, I believe April 14th, and you can't really look at 16,000 entries manually, or like maybe 5,000 entries, or even like 1,000 entries manually. You do need to either filter down the flow, or you do need some summary statistics to understand what's going on, because you can't really sort of go through all these individual orders. And that's what we were doing when we developed the platform, but we soon realized that it was not the right way to go about things. So then we had to create a dashboard that actually summarizes all this information into the options market dashboard and then the options ticker dashboard. And those are the dashboards that you need. You don't need to look at the live options flow all day, or maybe just to sort of dig deep into some sort of plays for particular stocks. Let's say if you just want to look at the flow for Apple, then we have 933. Let's say you filter it down, you can go to 600. So let's say you sort of come up with the top 100 orders using different filters. Sure, you can analyze that, but on an overall basis, you do want to sort of use some dashboard or some statistic to see how the flow is looking. And for that, we developed a really cool thing which we call the algo flow. And for many people, this is more like a black box, but it's not. And we have gone at length in describing what the algo flow is. We have a blog post, we have a couple of videos on what the algo flow is. So please, if you don't understand something in the platform, go to our channel and just watch some of the videos that we've posted. They go in detail as to how these things are working. So let's talk about the option summary, and we will just talk about the algo flow and the net flow. There is a lot of other stuff as well that you can look at. So for Twitter, because Twitter is sort of the most talked about stock these days because of Elon Musk, and we will talk about Twitter. So on Twitter, you can see we have the overall flow, we have the ratio of calls to puts, the net premiums, which would be the premiums on bullish positions minus the premiums on bearish positions, how the algo sentiment is, the spot change. Twitter actually went down 6%, the IV percentile, how is the implied volatility looking compared to the last 90 days. But what we really want to talk about is this algo flow. We have some really interesting stuff on dark pool and sweeper levels as well, but that's not the discussion of this tutorial. So what is the algo flow? So the algo flow is just an aggregated representation of the live options flow for a particular stock. So let's say we started the day and there were a bunch of calls being bought or a bunch of puts being sold. Both are obviously bullish signals. You'll see that this algo flow line will start going up. Then let's say the people that bought those calls sold because either their play was wrong, or let's say they wanted to take some profits and they sold their calls, and then maybe they thought price should now go down. So now let's say we start seeing more calls selling, even if it's not just those positions being closed, maybe it's new positions, but those are calls being sold and puts being bought, then you'll see this line go down. Then let's say maybe this is profit taking for all the puts because the price did go down, and then this is how the line, like every minute we look at the data up till that point in time, we aggregate every minute level data based on whether calls are bought, puts are sold, puts are bought, calls are sold. We aggregate all that information into a single point in time after filtering out a lot of bad flow, and that filtering is where sort of the alpha or the edge comes in. It's not just sort of throw out all flow and create a line. Sort of there's really intelligent filtering going on, but it's basically what the options flow in aggregate is saying for that particular stock at every minute of the day. And when you plot that against the stock price, what you see are these beautiful divergences that you can play both for swing trading and for day trading. So what was happening here? At the start of the day, the options flow was saying that price is bullish and options flow is bullish, and you can see the algo flow line, maybe for 5 minutes it went below zero, and then it went above, it turned green, price was going up, it started to go up. It started to go up before the price sort of made, so you can see here to here the price was still just starting to recover, and so there was this sort of small divergence where the algo went up, the price was starting to reverse, and the price went up as well, because all those options players, the smart money, thought the price should go up. Then you can see it stayed flat, the algo line stayed flat, and then it started going down, and the price kept coming towards the algo. And as long as it's going down, we are expecting that from an options flow perspective, these options flow traders are thinking that the price should go down, and you can see that the price keeps going down. Here the price makes sort of a consolidation, and you can see that options flow started going down as well. The algo flow stopped going down as well. And then what was this? So this is where some big players in the market came, and they had large bullish positions, let's say opened, or they had they traded some very large bullish positions, and that sent the algo it went straight up. But the price didn't really go up, right? And so this huge distance between the algo and the price, when this becomes really large, that is what we call a divergence. And whenever we have a divergence, we want or we expect the price to go towards the algo flow, and that's what happens very sort of commonly. Obviously it's not perfect, nothing is in the trading world, but it's a really good tool to gauge what the options flow sentiment is saying versus what the price is doing. So when they started to go down, but the algo stayed relatively constant after those big orders came in, so now we have this big divergence, right? And we want to play this divergence to the upside. So the play at the end of, let's say, Friday would be, we would expect Twitter to go up. Obviously there are a lot of news these days, so much of the price action is news driven, but if you're just looking at it from an options flow perspective, then you'd expect this to go up, let's say on Monday. And there are 3 or 4 hours left before the market open, and I do believe Twitter is up 2 or 3% in the pre-market, which actually sort of tells you why the flow stayed sort of bullish all day. One very important thing to discuss here is the amount of hedging that goes on with indices. So many times when markets are sort of in complete good trends, they're going up smoothly. Let's actually look at SPY. You'll often see that there are a lot of puts being bought, and you'll wonder why SPY is not going down when the algo is going down. Because a lot of puts are being bought, algo will actually start going down. And that's just because there is a lot of hedging going on. Since markets are going up nicely, people hedge their bullish positions with puts, and that's fine. But when you see a lot of volatility, then algo sort of starts to, when let's say price is going down and a lot of volatility in the market, then algo starts working well for indices as well. But in clean uptrends, please note that algo does not work well for indices just because of a lot of hedging that's going on. We try our best to remove it, but these indices are mainly used for hedging, so you can't really sort of remove all of it, which is why you see those divergences not pan out. But since we have a lot of volatility in the market these days, you will see that the algo worked well. So you can see algo went down, it kept going up, so there was this divergence. Now we expect the price to go down as well. It did. Then you can see this, the price is going down, then algo suddenly went up, so price started to then go up as well. So it's a really good gauge of the flow traders sentiment at every minute of the day. And this is the chart for 1 day. You can look at the chart for 5 minutes, which would give you about 5 days of algo flow, 15 days of algo flow, and about a month of algo flow, to get to gauge how slightly longer term and how slightly longer term flow is, what longer term flow is saying, and that could give you more swing trading plays. And since algo flow is based on calls bought, calls sold, puts bought, puts sold, we figured we wanted to dig deeper into whether this algo is being influenced by calls bought, puts bought, calls sold, or puts sold, which is why we developed this net flow. So net flow is the algo flow, but just split into calls and puts positions, and this and the algo flow, they both update every 30 seconds, so you don't have to refresh the page, they're both live. So for SPY, you can actually see that calls stayed relatively constant. So the reason algo kept going down was because there were a lot of puts being bought. And so now this gives you a more clear idea on what's going on in the options flow for SPY. You can see a lot of puts being bought, and price is going down these days. So probably because there's a lot of volatility, they're buying more puts. With a lot of volatility, you'll see more put buying actually sends the price down. And there is obviously a more fundamental reason for that, which is this GX. I won't discuss this right now, but this actually gives you an idea of whether the price is going to go with the flow just for indices or against the flow. But that's not the topic for, let's say, and actually just see what Twitter was doing from a net flow perspective. Okay, so this huge rally that we had looks like it was caused by a bunch of put selling, the red line going down, and a lot of call buying. You can see calls were being sold all day, but then they just kept going up. There was also a little bit of put buying, sure, but calls are still dominating. And if you don't understand this, these lines are just showing a cumulative calls being bought minus calls being sold. So that would be green. If it's going up, more calls are being bought. Red is the same. If it's going up, more puts are being bought. If it's going down, more puts are being sold. And for bullish plays, we want the red line to go down, the green line to go up. And I hope this is useful for you, and I hope this gives you an idea on how you should be choosing options flow, because it's very hard since offices are opening back up. And if you're not a full-time trader, let's say you are a swing trader, and even if you are a full-time trader, it's very hard to keep an eye on options flow throughout the day. So these kinds of dashboards really help you find out where the alpha is, where the edge is, where there are good plays to make, so that you can profit. All right, so that was just algo flow and net flow. We also have heat maps on where the money is now. Like, sure, calls are being bought, but where are the calls being bought? What strikes? What's expiration? And you can see that people were actually buying a lot of calls for July for 48 strike, which is why you see this big green. So it's a really comprehensive dashboard. I honestly believe this is the most comprehensive options dashboard in the market today, and we provide as much information in as nice of a way as we possibly can. And obviously I'm a trader myself as well, and this is something that I use every day and to make my own plays. And I hope just by looking at this stuff, you can realize that if you have this information, it could prove really useful in helping you gauge how flow traders, or how the overall market, or what the overall market is saying, and where do you want to be putting your efforts or putting your money in making plays. Now let's go to something called TradOutLoud. So sure, this is good. Now we have a basic idea of how a stock should whether a stock should go up or down because of the algo flow, because we can see what the options flow is saying on a more summary level or or on a more aggregate level, but which strike should we choose? Which expiration should we choose? What are those flow traders really doing that's meaningful that we can copy? So TradeOutLoud came from the idea that when I started and when we built this platform, what we were doing was just looking at big flow. So let's say a call order came in, it was like worth $1 million for a strike. The stock was at 50, the strike was at 52. What we do was just blindly go into a 52 strike for the same expiration because we are seeing 1.2, let's say $1 million being spent on that. Now that sounds okay. That sounds something that seems like something that we should be doing. But if you have spent some time with the options flow, you'll realize that single orders can easily be used for hedging purposes. Now that 1 million call position could just be a hedge for a very, let's say, $10 million large shares position that was short, and they were just buying that call to hedge that position. Now we have systems to try to sort of detect that and sort of replace it or remove it or filter it when we are calculating algo flow, but it's a very hard problem to solve in the market because we just don't have all the data based on what these flow traders are thinking when they are doing these things. Whether it's a hedge, like do they have an underlying shares position? It's very hard to tie the shares data with the options flow data. We are obviously spending some time, some efforts on that, but it's not doable right now for us. So we realized that single big orders were not really meaningful. So then we sort of did some analysis and we came up with a conclusion based on backtest over the last couple of years was, if you see a lot of repeat orders, then there is a good chance that multiple people are thinking about the same thing. And oftentimes, or like mostly, what happens is when multiple people are thinking about the same thing, or even when one person is building a big position slowly by doing a lot of repeat orders, that often ends up being a more directional play instead of being a hedge. Now this is a very sort of empirical observation. We did backtests. We realized that that's what happens when you see repeat flow, and we built a tool out of that. So TradeOutLoud is a tool that detects repeat flow. So let's say now, instead of seeing a $1 million order for 52 strike while the stock price is 50, we see, let's say, 10 orders, but each is worth about 250k, so that we end up with a $2.5 million position. But it's either a single plate that built that position consistently across some time, or it's just different people who are thinking the same thing. They are all expecting the price to go up. When that happens, and when you see multiple sort of orders in the options flow tool, a signal is sent to the TradeOutLoud tool. So you don't have to go analyze the options flow tool all day. A signal is sent here, and that signal tells you that there was a lot of repeat flow for that particular strike, stroke, expiration, where the total premiums were this. So I'll start right with JP Morgan. So this came in, I believe, on Thursday, sort of a noon Thursday. This is PST. This is EST. Sorry, the time is in EST. There were 39 total orders that were there for the strike 125 expiration, sort of September 16th, and the total premiums that were spent were $6 million in total on those 39 orders. So now it's probably not just one player, it's multiple people thinking that price should go towards 125. At that time, price was 127. So this signal came, we sent it to all our users, and lo and behold, on Friday, price touched 125. I think it was either 125, 125.1. So within just one day, the price actually went from where it was to where it is supposed to be based on this TradeOutLoud. And that's not just one example. Then we had NKE, 11 orders. This came in on Thursday morning, like 12 minutes, Friday morning, 12 minutes into the market open. We again shared this with all our users. Like this data, if you're not a subscriber, you can just open this tool right now and you'll be able to see historical data for you to actually see whether these things are working or not. So we have kept the website free for almost all users, but we only sort of show slightly delayed data so that users can see whether this data is worth their time and money. So this came in early morning, and we shared this with all our users obviously as well, since it's on the website, but we shared this on Twitter as well. So if obviously you want to see how things work, you can go to our Twitter as well. And price, I believe, was at about 127 or 128 when this came in, and the strike was 135. And let's say now these people, let's say these 11 different people are expecting the price to go towards 135, let's say in some time. Now, just looking at expiration being 4 September, that doesn't mean the price would go to 135 by September. Many times you'll see that the price starts moving right away, and that happens because of many fundamental reasons. When you put a lot of money into buying calls, then the market makers have to sort of buy shares because they just sold you the call, so they have to buy shares to hedge their position, which then sort of adds more bullish pressure for the stock. So there are more fundamental reasons as well. When you see big orders, big repeat flow, the price tends to go up. Obviously for I'm talking about calls right now. And I think within just sort of one day, this went from I think 127 all the way to about 134, and we actually played this. Like a lot of our users, I shared this on Twitter, a lot of the users played this, including me, and we all got out with different profit. I think I did like 11%, but this went up to, I believe, like 30 or 40% within just one day, while the rest of the market was going down. So this was the top order at the start of the day. This then obviously came at the end of the day, and we'll see in the next sort of couple of weeks how this one how this one goes, because the price is about it's 126. This is for 140, so we are expecting a $14 move. So let's actually see. Like, this is something that's not panned yet. This came in 1 minute before the market closed on Friday, and Monday hasn't sort of opened yet. So we'll see in a couple of months, or maybe in a couple of weeks, or maybe right away, how this one does. Then we previously had some like Oxy one. Again, this just keeps going up. And so anything above 10 orders is usually worth your attention, and anything below that is sure, if you want to do more due diligence, then you want to spend some time on it. But usually, like if you go to performance, you'll see that the trade flow premiums, these are in millions. So you can see that 20, 80% accuracy, 70, 80, and then 20 goes to 100%. And these are obviously not made up numbers. If you see a trade flow order with trade flow signal with 20 plus orders, then recently in the last 1 or 2 months, there had been a 100% chance that it actually ended up going in the money, which meant the stock price actually reached the strike price. So that's pretty cool because they are not, and again, this is for you can go to the tool, you can see for yourself. There are not that many tools in the market that can give you an 80% accuracy on a very consistent basis. So sure, you don't get a signal every day, but once you get one, you do some analysis. Let's say you look at the price action, you like everything, you make a play, and there is a very high probability that that play will work for you. So that was those were some of the tools that I wanted to discuss today. We do have very nice portfolios. These have been going up really nicely. Nice Sharpe ratio, nice sort of uptrend. They did go down a lot when we suddenly sort of started going up. And these are short only portfolios. These are some of the positions. So these are posted every day. You can see we had 3 entries and we had 1 exit. So this is really useful for people who cannot trade actively and who just want to invest their money. And I believe this is, and you can see all the trades right now. Showed some losses, but pretty nice. So this is a nice trade. So while the market was going up, this was the only trade that the algorithm made for a short position, and this on again March, and this has been going down pretty nicely. So we had a short position, it's up 52% right now. So we have portfolios. Then also some people want to spend a lot of time manually doing their research. Then we have scanners as well with a bunch of stuff that you can do. And then we have obviously we have dark pool data, we have a lot of other tools as well, insider trading, pairs trading, watch lists, and then finally we have everything available as a Discord bot as well. So if you run a Discord server and you want to use all the data that we have, you can just go to TradeOutLoud/Discord, and you'll be able to sort of see how our Discord bot works and everything. So with that, I'm ending this presentation. I hope this was useful to you. I really wanted to discuss the ideas on why do we go with repeat flow, why is it good to look at an aggregate and not the options flow, how do we actually go about looking at top sectors and how do we play them, how do we look for sort of pairs and see breakouts in them to make sure that a sector is actually leading, how do we anchor the VWAP, stuff like that. And I hope that's useful to you as a trader, so that even if you just sort of watch this presentation, you get something out of it. And even if you don't visit TradeOutLoud sort of ever, that's still fine, as long as I am able to provide some value from this presentation. I'd again like to thank the organizers of this great event for letting us speak, for inviting us, and I hope again this is useful for you. I wish you guys a very good night, a good evening, or a good day wherever you are. Thank you so much for watching this.